Welcome to the proinvestor.ai podcast, where we bring you sharp, insightful updates on financial results and outlooks, helping investors make better, informed decisions. Today, we are diving into the Q2FY25 earnings of Larsen Toubro, or L&T, a key player in the infrastructure and industrial sectors. Let's get straight to the numbers and business insights. Larsen Toubro's performance in the second quarter was in line with expectations, driven by a stellar 28% year-on-year growth in the projects and manufacturing (P&M) segment. The segment reported revenues of 445 billion Indian rupees, well ahead of projections, largely due to successful project executions in international markets. Meanwhile, the core business saw a 31% YoY growth in operating profitability, with improved margins in both infrastructure and high-tech manufacturing divisions. Overall, L&T recorded total revenue of 616 billion Indian rupees, a 21% YoY increase, and EBITDA reached 63.6 billion Indian rupees, up 13% YoY. The net profit for the quarter, or PAT, stood at 34 billion Indian rupees, in line with the forecasted range. Despite strong revenue growth, the EBITDA and PAT gains were moderate due to a one-off income last year that made the comparison base high. Let's break down the numbers by segment. Infrastructure. This segment delivered a robust performance, with sales growing 30% YoY to 319.5 billion Indian rupees. Overseas infrastructure revenue saw remarkable growth, up 108% YoY, driven by projects in the Middle East. Domestically, growth was somewhat muted at -1% YoY, likely influenced by India's upcoming elections. The infrastructure margin rose 60 basis points YoY, showing improved execution across various project sites. Energy. Sales for L&T's energy segment rose by 31% YoY, propelled by strong overseas execution, which jumped 55%. However, domestic energy revenue contracted by 3.5%. The hydrocarbon division continued to shine, though some moderation was seen due to a smaller order book in carbon solutions. High-tech manufacturing. This division experienced a 9% YoY growth, with domestic sales growing by 31%, while international orders were down by 45%. Despite these growth figures, EBITDA margins contracted by 210 basis points due to additional cost provisions on specific projects. Financial services. L&T Finance grew its revenue by 24% YoY, reaching 38.4 billion Indian rupees, with PAT up 17%, benefiting from strong retail disbursements and collections. Lastly, the developmental projects segment saw a decline of 25% YoY, impacted by a high comparative base due to one-off gains last year in Hyderabad Metro. Business outlook and guidance. Looking ahead, L&T is well positioned to benefit from India's national infrastructure pipeline and the Gati Shakti program. The company has projected a 10% YoY growth in order inflows, supported by a healthy order pipeline of 8.1 trillion Indian rupees, spanning infrastructure, hydrocarbon, and high-tech manufacturing. The management expects stable margins in the P&M segment and aims to keep the working capital cycle at around 15% of sales for FY25. They're also working towards reducing the Hyderabad Metro debt by nearly half through strategic monetization and governmental support. To our listeners, thank you for tuning into this episode of proinvestor.ai. Our platform is dedicated to helping investors like you make better, informed decisions with accurate insights. For those looking for an even deeper dive, the full earnings concall is available on Proinvestor's YouTube channel, where we break down each segment and answer your questions. Stay informed, invest smartly, and remember that proinvestor.ai is here to support your journey in the stock market.